Hello, good afternoon, guys, and welcome to today's Forex webinar. We are looking today at Forex Anatomy 1, and on this webinar, we're going to be talking about total candlestick patterns. We'll be having a total overview of Japanese candlesticks, single candlestick patterns, dual candlestick patterns, triple candlestick patterns, and then we'll be having a total summary about this. So, all based on our previous webinars, I believe that we have been having pure literacy and understanding of the financial market, and the series never stops. You can always log into your portals. You can always have the recordings also on YouTube to check thereafter, to brushing up your skills about the financial market. So today, we'll be talking about Japanese candlesticks. And as we all know, we already have three major chart patterns. We talk about line charts, we talk about bar charts, but the most commonly used, which is the candlestick charts, which involves, candles, and you have candles with wicks. Some come in different colors depending on the user, and also depending on how they all want the candlesticks to look like, the arrangement. You can all do this from your trading app, be it the MT4, web trader Z-Trader offers. And of course, you have a total overview and understanding to how to read chart patterns. And today we'll be looking at all the different candlestick patterns. We talk about the Marubozu. We're going to be talking about the inverted hammer. These chart patterns actually signifies or symbolizes different movements in the market. They give you a total hint of where the market is particularly going to be heading to. They give you a total hint of what what to expect, how much money to make, calculation of different things you can gain from this knowledge from knowing from the total values and total understanding of candlestick patterns. So let's kick off. Now, back in the days when we talked about candlestick patterns, totally it has a secret technique and popularity in the 90s. We have the originator of this, Steve Nissen, and candlestick charts has remained a buried secret. We can arguably say that Steve Nissen is Mr. Candlestick, of course, and he's the one who proposed the notion about having a direct understanding of the market with candlestick patterns. So for you to better understand what candlesticks are all about, it's just like letting you know that, just like your normal candle comes with wicks and all of that. So this gives a total and pure chart representation and understanding of the market. Next page, please. Now, when we talk about the candlestick types, now here we have a diagrammatic representation. Now, these are two wheel bodies. The first one, you can see it's a white candle and the other is a black, but on the MetaTrader 4, it comes with green and red. The lower shadow and the upper shadow, lower shadow and the upper shadow for both ends. Then we have the low and the highs, and we have the open and the close from bottom to top. And for the other candle type, we have the open and the close from top to bottom. Now, a real understanding for this is this. Japanese candlesticks can be used on any Forex time frames. We have 1 minute time frames, we have 5 minutes time frame, we have 10 minutes, we have 15, we have 30 minutes, we have 1 hour, we have 4 hours, we have the daily, we have the weekly, and we have the monthly time frame. So whether it be the 1 day, 1 hour, 30 minutes, whatever you want, they are purposefully used to describe the price action given during a particular time frame. Now, Japanese candlesticks are formed using the open, the high, the lows, and close of the chosen time period, of course. Now, If the close is above the open, then we say a hollow candlestick, usually displayed as a white, is drawn. But if the close is below the open, then a filled candlestick, usually displayed as black, is drawn. Now, the hollow or the filled section of the candlestick is called the real body, as you can see on the diagram. This is the real body of the candlesticks. The thin lines poking above and below the body displays the high, low, the range, and all called shadows. You understand? They're all called shadows. And the top of the upper shadow is called the high, while the bottom of the lower shadow is called the low. Now, these candlesticks usually come in various shapes and sizes, and they all have meanings and representations on the chart. They signify something. Most traders don't really get in-depth analysis, understanding of what this candlestick portray, and this actually sometimes affect their trades and affect their entry points and profits as well. They don't know when to close profits depending on what the candlestick shows. They don't know when to make entries depending on what the candlestick shows. So next page, please. Now candlesticks rather, comes in what we call sexy bodies, and long bodies indicates strong buying or selling pressure. Now, when you see a candlestick where really full, completely wickless, it has a name. I won't unveil the name now until we get to the chapter. It has a name. It means if it has no wicks at all, it means total buying pressure, be it for a buy candle or a sell candle. And the longer the body is, the more intense the buying or selling pressure is going to be. And this means that either buyers or sellers were stronger and took a lot of control of the market. Also, similarly, we have what we call short bodies, which implies very little buying or selling activity. While in Forex lingos, we call them bulls, which means buyers, and bears, which means sellers. Uptrend also is a name for buy. Downtrend also is a name for sell. So next page, please. All right. So now let's talk about long and short candles. Long white Japanese candles show strong buying momentum or pressure. And of course, the longer the white candle, the further the close is above the open. Now, this totally indicates that prices increase considerably from open to close, and buyers will be aggressive. In other words, you can say the bulls are kicking while the bears are, butts big time. Now, for long white candles, which have little or no wicks at all, it signifies total buying pressure. This means a lot of clicks on the buy button from traders around the world makes that candle pump up. And also we have similarly for a bearish candle, if a lot of traders around the world are clicking on the sell button, you see a lot of selling pressure. It all is being represented on each candlestick. So showing some strong selling pressure, the longer the black Japanese candlestick, the further the close is below the open. Why? This indicates that prices fell a great deal from the open and sellers were a bit aggressive. In other words, the bears were grabbing the bulls by their horns and, total bodies just slamming down everywhere. Now, we also have what we call short candles, as you can see close to the large candles. They also signify something. Next page, please. Now, those short candles actually mean low pressure, low buying or selling pressure. It means that momentum is currently or gradually dying in the market. So when you see such candles maybe appear at the end of a long trend, it's a total signal to you that, look, you don't need to buy anymore. You don't need to sell anymore. You just need to wait to know where the market is currently heading to. Because once you place a buy, when you see such candle and you place a buy trade, it most likely might not end in profit. It most likely might begin reversing, and you might not make such money from such entry points. So understanding that, let's move ahead. We'll talk about longer upper shadow and longer lower shadow. Now you can see these candles. Right beside it, you have a very long wick with a low body and a little wick to the downside. Then right beside it we have a wick to the upside, a short wick, and downside having a very low wick. Now, all these candlestick patterns, they actually symbolize or signify something. Now, the upper and the lower shadows on Japanese candlesticks provide important clues about the trading session. Now, upper shadows signify the session high, while lower shadows signifies that the session is low. Okay. Now, candlesticks with long shadows show that trading action occurred well past the open and the close, while Japanese candlesticks with short shadows indicate that most of the trading action was confined near the open and the close. Now, if a Japanese candlestick has a long upper shadow and short lower shadow, this means that buyers fixed their muscles and bid prices a bit higher. But for one reason or another, we feel that sellers came in at some point and, they drove prices back down to end the session back near its open price. For instance, if a Japanese candlestick has a long lower shadow and short upper shadow, this totally means that sellers flashed their watchguard, absent forced prices a bit lower, but for some reason or another, buyers came in and drove prices back up to the end session, back near its open price. So what we're trying to let you know is this: when you see for example, the long upper shadow with wicks, it means prices were a bit depleted and rushed down. It attained a certain level, but at some point, maybe traders were closing out in profits and it ended with that. At this point, there's a total indecision. It means that no trader is looking to buy more or purposefully sell more, as the case may be, if it's a bearish candle. So it's very ideal to understand that these candlestick patterns are actually called mysterious shadows. And at this point in time, it gives you a hint not to buy or not to sell at some particular time. You just need to wait and understand where the market is heading to before you make a move. Next page, please. Yeah. Now, we also have what we call spinning tops. Spinning tops have are more like short candlesticks. They are Japanese candlesticks with a longer upper shadow, a bit of a long lower shadow, and small real bodies are called spinning tops. Now, the color of the real body is not quite very important. The pattern actually indicates indecision. It's almost similar to a candle we call doji. It signifies total indecision between the buyers and the sellers. Now, the small real body, whether it be the hollow or filled, it shows little movement from open to close. And then the shadows indicate that both buyers and sellers were fighting, but nobody could gain the upper hand. Even though the session, opened and closed with little change, prices moved significantly higher and lower in the meantime. And neither buyers nor sellers could gain the upper hand, and the result was a total standoff. Now, when you notice a spinning top form at the end of an uptrend, this actually means that there aren't many buyers left, and a possible reversal in the market in direction could occur, be it for an uptrend or for a downtrend. If a spinning top comes at a downtrend, it usually means there aren't many sellers left, and a possible reversal in the direction could occur. And you need to pay attention to these, because when you have a series of buy candles going upwards and then you notice this candlestick, I think it's time to take your profits out and wait for next move, be it for a buy signal or for a sell signal, whatever the case may be. When I say buy signal, I mean uptrend, bullish, or sell signal, downtrend, bearish. Next page, please. Yeah. Now we also have what we call Marubozu candles, also similar to the high candles. Now, one important thing we need to notice about the Marubozu candles, they are completely wickless, meaning they have no candle wicks at the top or at the bottom, neither ways. This means total buying pressure. Now, as a trader, once you spot these candlesticks at any point, it should give you a total understanding that there's a lot of buyers in the market at this point in time. Now, if you're coming down from a downtrend and you spot a bullish or green Marubozu candle, gives you all the intuition that, look, I need to buy as much as possible. I need to place a lot of buy positions, make a lot of entries to secure a lot of money, because there is a lot of buying pressure currently at the market. Or be it a red bearish candle, there is a lot of selling pressure currently at the market. So we can say, depending on whether the candlestick body is filled or hollow, the high and low are the same as it's open and closed. Check out the two types. You see, without wicks, A white Marubozu contains a long white body without shadows. Now the open price equals the low price and the close price equals the high price. This is a very bullish candle. And as it shows the buyers were in control the entire session, it usually becomes the first part of a bullish continuation or bullish reversal pattern. Now we have a black Marubozu candle which contains a long black body with completely no shadows. When I say no shadows, I mean no wicks. And the open equals the high and the close equals the low. This is a very bearish candle as it shows that, sellers are being controlled or the price action whatsoever the entire session. It totally implies that bearish continuation or bearish reversal in the case. Now, Marubozu candles are very, very key and important candlesticks when you notice them on the chart. A lot of people make money, a lot of money rather, when they notice this candlestick pattern. So when you see something like this, it gives you a full signal that you can make a lot of money from buy entries or sell entries, depending on whatever trend you're on, because it simply signifies that there's a lot of buying pressure, a lot of selling pressure currently in the market. Next page, please. Yeah, we talked briefly about the doji, which is similar to the spinning tops. The doji candlestick has the same open and close price, or at least their bodies are extremely short. The doji should have a very small body that appears as a thin line. Now, doji candlestick suggests indecision or a struggle for tough positioning between buyers and sellers. Prices move above and below the open price during the session, but then it closed at a very, very near open price. Now, this actually means that neither the buyers nor the sellers are able to gain control, and the result was essentially a draw. Now, there are 4 special types of doji candlesticks. The length of the upper and lower shadows can vary, and the resulting Forex candlestick looks like a cross, inverted cross or plus sign, and the word doji refers to both the singular and the plural form. Now, doji candlesticks symbolize total indecision in the market. So when you see a doji candlestick with, complete no wicks or whatsoever, it gives you a hint that what? Buyers and sellers are having a tough and indecision period. They don't know where the market is heading to. And as an experienced trader, I tell most people that, look, when you see a doji candlestick, you just stay away from that market or that chart for that point in time, because you can never understand where it's going to be. It's either maybe you place a buy trade, it reverses, or you place a sell trade, and before you know it, it booms up. So it's very essential when you see a doji candle, you wait. You understand where the market is actually heading to before you proceed with your entries. Next page, please. Now we have the different types of dojis. They come in different patterns. We have the long leg doji. You can see wick at the top and a wick at the down. Then right in the middle is where you have the candlestick. Yeah, that's a candlestick, but the thing is this: it's so very thin that you cannot see it clearly. But yes, it's a candlestick. Just that total indecision at that point. Now we have the dragonfly doji, which means that a lot of buying pressure came at some point, or sorry, a lot of selling pressure came at some point, and then a retracement back to form a doji, meaning sellers took out their money, and then it ended up with a very thin indecision candle for more sell to happen. Meaning nobody was willing to sell again at that point because they never understood where the market was going. Now, the same thing applies for the gravestone doji. A lot of buying pressure occurred, and then it retraced down to close at a very minimal doji point, meaning a lot of buyers took their money off, and then the rest buyers came in late and then noticed this, and nobody was willing to kick in for more buying pressure. Then we have the 4 price doji, usually having no wick, comes in that form. Now, if a doji forms after a series of candlesticks with long hollow bodies like white Marubozus, the doji signals that the buyers are becoming exhausted and weakening. And in order for price to continue rising, more buyers are needed, but there aren't anymore. And sellers are licking their chops and are looking to come in and, drive the price back down, just as the case is. Next page, please. Yeah, very importantly, we have what we call the long white candle plus doji. Now, we are currently gradually moving into dual candlestick patterns. If a doji forms from a series of candlesticks with long filled bodies like the black Maribozus, we have the doji signals that sellers are becoming exhausted and weak. And in order for price to continue falling, more sellers are needed, but sellers are all tapped out. Now, buyers are currently foaming in the mouth for a chance to get in the chip. So when you see that long candle and then you see a doji at the top, it means that a lot of buyers have accumulated much profit on the market. And then at this point, there is an indecision, which means we don't know what to do any longer. I think a lot of buyers have taken much profit from this market. So let's wait for a next signal from the market. And the same applies for a downward candle, which has a doji appear next to it. While the decline is sputtering due to lack of new sellers, further buying strength is a bit required to confirm any reversal. We look for a white candlestick to close above the long black candlestick open. And in the next following session, we'll take a look at specific Japanese candlestick patterns and what they are all telling us. And hopefully by the end of this lesson on candlesticks, you will know how to recognize different types of Forex candlestick patterns and make sound trading decisions all based on them. Next page, please. Now, we are looking at single candlestick patterns, and we'll never leave out the hammer and the hanging man. The hammer and hanging man, they look exactly alike, be it for buy signal or sell signal, but they have totally different meanings depending on past price action. Both have cute little bodies, long lower shadows, and shorter absent upper shadows. And they actually signify a lot of selling pressure if it was a downside, and then a retracement happened, or a lot of buying pressure to the upside, and then some retracement happened. Next page, please. So, for instance, if you're currently on a downtrend and you notice such candlesticks, they actually signify a reversal. Now, we are seeing from the first one, the hammer, series of sell candles. And then we notice this very deep candle that went down and then retraced back up. It's just a recognition criteria that the long shadow is about 2 or 3 times of the real body, little or no upper shadow. And the real body is at the upper end of the trading range, and the color of the real body is not really important. It means that we have quite the downside, and then a retracement, and then a gradual pushback to the upside. A total reversal of just happening at that point. So when you notice such candlesticks on a downtrend for the hammer, you should understand that a reversal is looking to happen. Now, the hanging man, if you're on an uptrend, you see a series of candles going up, and you notice that very important hanging man candle right there. You see it there at the top of a bullish run. It just gives you an idea that, look, a reversal is about to happen. And just as you noticed, once that candle appeared there, a reversal in the market started occurring gradually. Now, the hammer is a bullish reversal pattern that forms during a downtrend. A little hint for you. It is named because the market is hammering out of a bottom. When price is falling, hammer signal that the bottom is near and price will start rising again, while the lower shadow indicates that sellers push prices a bit lower, but buyers were able to overcome the selling pressure and close near the open. Just because you see a hammer forming a downtrend doesn't mean you automatically place a buy order. More bullish confirmation is needed before it's safe to pull the trigger on that one. Now, a typical example of confirmation will be to wait for a white candlestick to close above the open to the right side of the hammer before you make an entry. Next page, please. While for a hanging man, it's more like a bearish reversal pattern that can also mark a top or strong resistance level when price is rising. The formation of a hanging man indicates that sellers are beginning to outnumber buyers, while the long lower shadow shows that sellers push prices lower during the session, while buyers were able to push the prices back up some, but only near the open. Now, this should set off alarms since this tells us that there are no buyers left to provide the necessary momentum to keep raising the price. A longer lower shadow, which is about 2 or 3 times of the real body, little or no upper shadow. The real body is at the upper end of the trading range, while the color of the body, not really important. Through a black body, it means bearish than a white body. But one thing to understand about the hanging man, the long lower shadow shows that sellers push prices lower during the session, while buyers were able to push the price back up some more, but only the near open. So it's a very important signal for a reversal in the market. Always take note about this. Next page, please. Now, we have a very important candlestick called the inverted hammer. And inverted hammer, when it's a bearish one, and it's called a shooting star when it's a bullish one. Now, the inverted hammer or the shooting star, they look both identical. And the only difference between them is whether you are in a downtrend or in an uptrend, as I mentioned earlier. Both candlesticks have little, small bodies filled with hollows, either filled or hollow, while long upper shadows and small or absent lower shadows also present on these candlestick types. And they actually signify a reversal too in the market. Next page, please. Now, when you notice these candlesticks, the inverted hammer, of course, we're talking about first, it occurs when the price has been falling and suggests that the possibility of a reversal. Its long upper shadow shows that buyers tried to bid the price a bit higher. However, sellers saw that the buyers were doing, doing a lot of checking and attempted to push the price a bit back down. Understandably, the buyers had eaten enough of their, profits and managed to close the session near the open. But since the sellers weren't able to close the price any lower, it was a clear indication that everybody who wanted to sell at that point had already sold. And if there are no more sellers, what is left? Of course, the buyers. So when you see that candlestick pattern, it means a total reversal. You see a series of sell candlesticks, and then you notice an inverted hammer, total reversal in process. So always take hint of that. Always be ready for that. Next page, please. The shooting stars, almost the same thing. Now, the shooting star is more like a bearish reversal pattern. Looks quite identical to inverted hammer. Now, it means that a series of buy candles have been occurring. It has been on an uptrend, and then the market got to a top peak. At that point, it shaped in case that the price opened at its low, rallied a bit, but then it pulled back to the bottom, meaning it went high up, continued going up, but then at some point, people started closing out profits. Buyers attempted to push the price up, but then sellers came in and overpowered them. In other sense to this, people closed in a lot of profit at that point. Look, the market is turning, a total reversal is happening. Why don't we just close our profits on buy positions we already had? Because sellers are about to take over. So this is a definite bearish sign since there are no more buyers there because they have all been murdered. They have all been taken out. So when you notice such candlestick patterns at the end of an uptrend, it gives you a total understanding. Now is the time to sell. Just sell with your whole life. Sell whatever you have and make some money out of it. Now, next page, please. Moving ahead, we're talking about dual candlestick patterns. We have the bullish engulfing. We have also the bearish engulfing. Take, for instance, you're on a downtrend, and then you see a very little candle, which signifies the end of a downtrend. Close to it, you have a bullish candle that totally covers the end of the downtrend candle. This gives you a total hint that what a total reversal is about to happen in the market. So we are seeing series of sell candles downwards, and then we see that bullish engulfing covers maybe the last candle or even the last two candles, as the case may be. Sometimes it means, or rather it symbolizes total reversal in the market, be it for a bullish engulfing or for a bearish engulfing. For a bearish engulfing, we can see quite similar. Once you see a you're in a total uptrend, and then you see a bearish engulfing candle totally covering that bullish last or previous bullish candle, it means a total reversal in the market. So understand this. Whenever you come across it in your charts, you should actually know what they mean. It should help you in your entries and in your profits closure. Next page, please. Now, the bullish engulfing pattern is a two candlestick pattern. It signals strong up move may be coming. It happens when a bearish candle is immediately followed by a larger bullish candle, while the second candle engulfs the bearish candle. Why this means buyers are flexing their muscles and there's, it could be a strong up move and a recent downtrend or a period of consolidation. On the other hand, we have the bearish engulfing pattern, which is the opposite of bullish pattern. And this type of candlestick pattern occurs when the bullish candle is immediately followed by a bearish candle that completely engulfs it. This is to tell you that sellers overpower the buyers and that a strong move down could happen. And we always pay attention to this because they have they give a total hint about where the market is going to be heading to. So we never take them for granted. They're always very important. Next page, please. Yeah. Importantly, we have what we call tweezer bottoms and tweezer tops. These are identical candles. The tweezers are more like dual candlestick reversal patterns. This type of candlesticks are usually mainly spotted after an extended uptrend. Maybe you're in a series of uptrend, and uptrend lasted like up to 8, 9 abnormal candles, and then after the extended uptrend or downtrend, it indicated that a reversal might occur soon. You notice how the candlestick formation looks just like a pair of tweezers. Amazingly, you begin to understand, oh, at this point, these tweezer twin candles signify a reversal. The characteristics of this, the first candlestick is the same as the overall trend. If price is moving up, then the first candle should be a bit bullish. The second candlestick is opposite the overall trend. If price is moving up, the second candlestick should be bearish. Now, the shadows of the candlestick should be of equal length. We have tweezer tops should have the same highs, while tweezer bottoms should, of course, have the same lows. Next page, please. Finally, we are moving ahead to our triple candlestick patterns. We have the evening and the morning stars, as the name are being called. Take a look at the morning stars, series of bearish downtrends, and then we have the doji, and then we have a bullish candle appears just right after the doji. Similarly, for the evening star, we have series of uptrend, then we have a doji. Right after that, we have a bearish candle appear. Now, taking those last 3 candles, when you spot these 3 candles, it means a reversal in the market. The morning and the evening star are triple candlestick patterns that you can usually find at the end of a trend. They are reversal patterns. They can be recognized through, 3 characteristics. Let's use, for example, the evening star pattern on the right as an example of what you may see. First, the first candlestick, it's a bullish candle, which is part of a recent uptrend, while the second candle has a small body, indicating that there could be, a bit of indecision in the market, while this candle can be either bullish or bearish as the case may be. While the third candlestick acts as a confirmation that a reversal is currently in place, as the candle closes beyond the midpoint of the first candle. So we're going to see more hints about triple candlestick patterns as we move ahead. Next page, please. We are talking now about the 3 white soldiers and the black crows. A very funny name to this, of course. Now, the 3 white soldiers, the pattern formed when 3 long bullish candles follow a downtrend. Right after a downtrend, you notice gradually 3 strong bullish candles start shooting up. Signaling a reversal has occurred. This type of triple candlestick pattern is considered as one of the most potent in your face bullish signals, especially when it occurs after an extended downtrend and a short period of consolidation. Now, the first 3 of the 3 soldiers is called a reversal candle. It either ends the downtrend or implies that a period of consolidation that followed the downtrend is over. For the pattern to be considered valid, the second candlestick should be bigger than the previous candlestick's body. Also, the second candlestick should close near its high, leaving a small or non-existent upper wick. Now, for the three white soldiers patterns to be completed, the last candlestick should be at least the same size as the second candle and have a small or no shadow at all. So take, for instance, the three black close, you see them charging downwards right after an uptrend just happened. The next thing you should be thinking of, I need to sell in this market. I need to sell with my whole account, if possible. Next page, please. Now, the three black crows candlestick is just the opposite of the three white soldiers. It is formed when there are three bearish candles following an uptrend, a strong uptrend, of course, indicating that a reversal is currently in the works. Now, the second candle body should be bigger than the first candle and should close at a very near its low. Finally, the third candle should be the same size or larger than the second candle's body with a very short or no lower shadow. We should have a total understanding that what a full sale market is in the process, and you should be ready for it. Next page, please. Now, we have what we call the three upside down, just similar to the first one we talked about. It has to do with the last three candles before the point of reversal. A downtrend, and then you see one and two candles shooting up. Now, the three inside up candlestick formation is a trend reversal pattern that is found at the bottom of a downtrend. Now, this triple candlestick pattern indicates that a downtrend is possibly over and that a new uptrend has started. For a valid tree inside, we say about candlestick formation, we look at these three properties most importantly. First, the candle should be found at the bottom of a downtrend and must be characterized by a long bearish candle. Very importantly, must be characterized by a long bearish candle. Number two, the second candle should at least make it up all the way up to the midpoint of the first candle. Number three, the third candlestick needs to close above the first candle's high to confirm that buyers have totally been overpowered and the strength of the downward trend is about to kick off. Next page, please. Okay, so I think we just have to need to have a summary about what we talked about today. We talked purposely about all the candlestick patterns. We talked about the Maribozu, which has no wicks at all. We talked about the spinning tops, signifies reversal. Then we talked about the doji. The doji signifies no indecision in the market. A very important candle which tells us do not sell at this point, do not buy at this point. Just wait for the next move of the market before you make an entry. Then we talked about the dual candlestick patterns, the three black crows, the three white soldiers, and the rest of them like that. So very importantly, these candlestick patterns have a huge impact in your profitability, meaning that it gives you upper hand to know when to make an entry into the market, to know when to secure your profits, to know when to leave the market, and the rest of it like that. So stay tuned for our next session next Friday, Forex Anatomy 2. See you guys next week. Bye for now.